Hello and welcome to another Smaulgld live stream. Today is Thursday, July 5th, 2018. Today was a big news day. We're going to get to all that news. The title of tonight's episode is Train Wreck on China's Belt and Road. But first, I just noticed on my YouTube channel that I've achieved a few modest milestones. 3,000 subscribers and 500,000 views. Now, I know I just recently got about 120 subscribers due to my appearance mostly on X22 report for YouTube that was published yesterday. So I want to thank X22 and Dave for exposing my content to a wider audience, but also over the years, I want to also thank the other channels that I've appeared on: Wall Street for Main Street, Future Money Trends, Wealth Research Group, X22 Report, SGT Report, Kennedy Financial, Daily Coin, Silver Fortune, Salivate Metal, Rethinking the Dollar, and Silver Doctor. So I want to thank those channels and their owners and operators for having me on their channels. Also, I just recorded today a Silver Doctors interview. That should be going live tomorrow. So if you haven't seen the X22 interview, that one's up on X22 Spotlight today. And tomorrow, the Silver Doctors will be up on Silver Doctors channel. And then I'm doing another one on Monday with the Wealth Research Group. So please be sure to check them out. And also, I just want to again thank you, all the channels who have had me on their respective YouTube channels. All right, well, let's take a look now at the news of the day. Gold and silver, they did pretty well because even though the Fed came out today and suggested that the rate hikes are far from over, silver and gold had rallied during the day and held their gains after the minutes were released. And the minutes were somewhat hawkish, but the silver managed to hold above $16 an ounce, closed at $16.03. And gold managed to hold above $12.57 an ounce, above $12.50 an ounce, and closed at $12.57. So the Fed, now sometimes what we've seen with these price actions, after the Fed says something that you might think might drive the price down and doesn't, you get it the next day. And sometimes the reverse happens too. You think that the Fed is a bit dovish, the prices don't move, and then the next day they move. So let's keep an eye on what happens tomorrow with the gold and silver prices. Tomorrow's Friday. As to the cryptos, really you can't say it was much of a day unless you move one way or the other 10%. I would say it was somewhat of a down day, but Litecoin still well above 80 at 83.30 at the moment. They also don't close ever; they just stay open. Bitcoin at 65.31, Ethereum at about 4.68. So the cryptos treading water today, even though they may be down 2-4%. At some point during the day, they're up 2 or 4%. In other news, Pruitt resigned today. Now, he was the EPA guy, and he resigned pretty much because of scandals: taxpayer-funded first-class travel, discounted condo rental from a D.C. lobbyist, a lot of accusations. I don't know if he ever faced them, but there was always a lot of news reports about this guy. He installed a soundproof phone booth in his office for $43,000. You notice this happens often in cabinet positions. I guess they figure they hit the big time and they start living it up. I think we had something like that with Ben Carson as well. But it's not just the Trump administration. You seem to have these secretaries of whatever alphabet agency often go off on their own tangents. But anyway, he's gone, and they've appointed and approved the deputy director, whatever it is, of the EPA, and he'll take his position. I don't know much about their policy, so I can't comment on that. Now, what we talked about, the Fed minutes were released. Just a quick rundown. Now, we're looking at, they're saying, a 4% GDP and not quite 2% inflation. And the Fed is concerned, this is the age-old argument, is how do you keep raising rates and choke off an economy, or you don't raise the rates and you let inflation run too hot. And they're doing this Goldilocks thing of not too hot, not too cold. And they know that if they raise rates too much, they can they put the economy into recession, which inevitably they always do. Greenspan, we saw, did that into the dot-com bubble bursting. Then he had to go and cut rates after that. And then also the Fed was concerned that if you don't raise the rates, then the economy is going to get into some type of overdrive, and you're going to get inflation, financial imbalances, and then that's going to lead to a recession. The Fed has tried to do over the past 30 years is orchestrate the economy. Don't let it go through natural business cycles. They try to smooth it out, refuse to have a recession. Don't let the economy take off. That's basically what they're trying to do. Now, there is a wild card in this, and they did recognize it in the minutes. That is the trade tariffs. The Fed is helpless to do anything about that. That's probably a good thing. So they don't know where that'll go. They don't know if that will cut investment in the United States, cut investment overseas, cut investment in both, cut investment in one and not the other. And they don't know what the impact of that will be. And also, they really can't factor in what impact the tax cuts will have. That's the fiscal stimulus. So they believe they should continue to raise interest rates, but they realize that they could overshoot their boundaries there if the trade tensions cause a problem, or if they just raise them too much. So that was the Fed. They did sound a more hawkish tone in that they did remove the language that they need to keep rates accommodative for a considerable period of time or for some time. So they believe, it sounds like they think the economy has reached escape velocity. It's not really at risk of taking off, but at the same time, they want to be careful with the rate hikes. And I also think that they've raised them not enough. I mean, they normalized, they think, is like 3%. They're trying to get there. They may get there, but it's going to be difficult if they're at 3% and the other countries' central banks are at 0 or negative. In other news, Trump was in Montana. I did manage to catch this in the car ride home. He's campaigning for a guy named Matt Rosendale, who's a Republican, against a Democrat, John Tester. And he was in pretty good form because Trump won Montana by a wide margin. That wasn't even close. And yet they do have a Democrat Senator, John Tester, who's running against this Republican. And he is not even he's not like a Reagan Democrat. He's like a regular Democrat. He is not for Trump in any way, shape, or form. He didn't vote for the tax cuts. He didn't vote for repeal of Obamacare. So he's not a moderate Democrat. He's a regular Democrat. And, of course, the crowd was whipped into a frenzy, lock her up when Trump was talking about how the system is rigged. He also issued a challenge to Elizabeth Warren, called her Pocahontas again, and asked her to get tested to see if she indeed is Native American. And he mocked her, saying, which tribe is she from? She doesn't know. The only test she passed is saying her grandmother had high cheekbones. So he was in his element with these Montanians, I don't know if that's the word, and he even said that the Democrats got their asses kicked. So he felt he was amongst a very partisan crowd, and he took it out on the media again, calling them dishonest. Typical Trump rally, but that's where he was, and we'll see how the Republicans do in the midterms. Normally, when the midterms come in a president's first term, they usually get beaten because that's just the nature of the game. The president gets elected, and then they say it's part of the American Constitution, but the American psyche that you need to curtail the president's powers by voting for the opposition party in his second year. And that happened to Bush, that happened to Reagan, that happened to Clinton, and that happened to Obama, the Tea Party. So we'll see if there's a blue wave, although everything in politics is different when you have Donald Trump. So it's possible he may be able to hold off a blue wave. He may be able to even win some seats. It will indeed be another interesting election in 2018. All right, well, let's get to the story of the evening, and that is this Chinese Belt and Road. The Chinese Belt and Road train wreck First of all, if you don't know what the Chinese Belt and Road Initiative is, it is a Chinese initiative where they have outlined, and they have it on their website. You can go to it. It's english.gov.cn, archive publications. If you go there, they explain what the concept is. Now, remember the way the Chinese economy works, it's centrally planned. They centrally plan their domestic economy, and some would say they've done a decent job. They've created that great growth. They also know that their board of governors, one of the board of governors has said they may have created a Minsky moment where they have basically created too much debt or issued too much credit in order to create the employment, in order to create the GDP, and they may be at a point now where creating more credit isn't going to help and that it may implode. So one of the things that they've done, realizing that they have to continually grow, you have to feed the beast, is they would take their investments overseas. Now, this is on the concept that if you build it, they will come. So what they want to do is they want to go through the area of the world which is significantly underdeveloped by Western standards, but yet has large population and has a large amount of national resources. Did I say national resources or natural? Large amounts of natural resources. And they want to invest in about 65 countries, which basically they say is it's about 2/3 of the population of the world. It has a decent, maybe half the GDP, and a good portion, maybe 75% of all of the energy reserves. Also, there are a lot of parts of the Belt and Road that are economically barren. And the idea is that if you can connect the barren parts with the good, not the good parts, with the economically semi-developed parts, you can create an economic zone and you can build the infrastructure. And then when you build the infrastructure, you can create the trade, and then you can move the resources. And it all sounds like something that probably should have happened already, but it needs some type of stimulus, so to speak, in the form of a major investor. And that's what China has presented itself as, that they want to do this. Well, today that vision hit a bit of a snag because the owner of Malaysia's East Coast Railway link told the Chinese to stop working. Now, this is a $20 billion project that the Chinese had started on, and it's supposed to do a 500-mile East Coast rail link that connects the South China Sea to the peninsula part of Malaysia. And then you got strategic shipping routes, and it's one of the main centerpieces of the Belt and Road Initiative. Now, why did they cancel this? Well, Malaysia, I guess, is going through a similar political upheaval. You don't hear much about it like the United States, almost a Malaysia first type of environment there. And they want to renegotiate the terms, they say, deal with China. Now, I don't know what those deals are. But before I get into that, I just want to alert you to a story that I had covered back sometime last year, around September. There is a competing or potentially competing infrastructure group that would compete with the China's Belt and Road, and that is an entity loosely called the Quad, which includes the United States, Japan, India, and Australia. And the idea there with that group would be, obviously you can't just allow China to just walk into a barren area or an area that requires economic investment and infrastructure and just allow them to do it with no competition. And in fact, that's not good for the countries either, because now you're beholden to just one vendor to give you the financing, one vendor to give you the infrastructure work, the design, and so on. So Japan, especially wanting to make sure it keeps its economic influence in the region, has joined with India, Australia, and the United States to think about development opportunities along the Belt and Road. Now, when I covered this last year, one of the things I thought through was a scenario that has just happened here. That if there is a deal that China has entered into that either isn't working just because it didn't make sense to do the deal in the first place, but they'd have no way of knowing that when they started it, or the deal was priced too favorably to China and not favorably enough to the host country, meaning that the host country basically agreed to it, but they weren't going to really reap the benefits of it. It was going to work to China's advantage because China was going to make a lot more back on the loan. China was going to get all the work done, get the workers, whatever it would be, that the deals might be one-sided, especially in areas where there's a need for the project. Now, in areas where there's not a need for the project, then those areas aren't market-based, and China could probably, they don't need competition because there's no market need for it. So what I expected to happen was, where there are deals that don't make sense for the host country, that they may pull out. We've seen that before, countries pulling out of deals, but no one to replace them. Now, it's possible in this case they could pull out of this deal, or they've just suspended the deal, and they may want to renegotiate it. But if the negotiations don't go well, they may renegotiate this with the Quad or some other entity, or just Japan, which also has its own initiative where it also does investment throughout Asia. So you don't know what's going to happen with this particular one. But Malaysia's government is saying they need to cut the national debt, stamp out corruption, and they got to review all these major products agreed to by the prior administration. Sounds just like Trump. They've been ripping us off on trade. He wants to renegotiate the trade agreements. So Malaysia's new government may decide they're going to suspend the Chinese work. We don't know whether they'll start it again. We don't know if they'll renegotiate the terms and stay with China. We may see that they don't do the deal at all. Maybe they feel it's not in their interest to even bother with this at the time. They may decide to go with China and just renegotiate the terms. They may decide to ditch China and go with another entity on better terms. We don't know. But the point about the Belt and Road Initiative is there is no guarantee that China will be able to export its credit-driven growth machine to new areas, because it doesn't control the rest of the world the way it controls its own borders. So what happens in China, they can pretty much, under central planning, figure out how it works. Once they get out into the free market and they have to figure out what currencies they're going to be using and all this, they run into their central planning is hard enough when you control the playing field in your own country. It becomes more difficult when you're outside of your country and you're in an area where perhaps the economy doesn't need what you want to build, or it's not economic at the prices that you want to build it, where it makes sense for you to do it, or it may not make sense economically, but you do it anyway in order to create the growth and maybe to create the benefits that creating the infrastructure may provide for China. So it really is, if they build it, they will come, but it's a very ambitious one. Now, what the Quad intends to do is not necessarily, I mean, they could compete directly with China on a lot of deals. They could also bid up the deals enough so that China actually pays more than they're worth. Or, on the plus side, they could actually provide bridge financing. They can see deals that might work where China may be a little stretched, and that's possible too, that this may be the reverse of Malaysia pulling out of the deal. It could be that China feels stretched right now with their stock market dropping 25%, the yuan under pressure. Who knows what the situation in China is? So this could be a face-saving thing. Who knows? I don't think that's the case, but that's also possible that China may be less ambitious in the Belt and Road as a result of things that have been happening within China. So it's not a clear-cut path towards global dominance. When you look at the Belt and Road Initiative, there's always competing finance. There's always internal politics, as we saw with Malaysia, that could slow these types of deals. All right, so that's it for the update on the train wreck on China's Belt and Road. Let me know what you think. And let's take a look at some of the comments. Tom Manley has become a regular here. Good evening. And thank you. I take it the congratulations were for the 3,000 subscribers and the 500,000 views that Smaulgld channel has attained. And again, he says all good channels. For those of you misses, Wall Street for Main Street, Future Money Trends, Wealth Research Group, X22, SGT Report, Kennedy Financial, Daily Coin, Silver Fortune, Salivate Metal, Rethinking the Dollar, and Silver Doctors, all channels that have hosted myself on their channels, and I thank them for that. And if there was any other channel I might have gone on and left out, I thank them as well. Joe Lazaro, welcome back. I wonder if Pruitt getting heckled out of a restaurant was the last straw. Could have factored into it, but I think the heckling, it's a one-time thing. I'm not sure that that would have driven him out. I think what drove him out, he might have been asked to leave, because these types of scandals, the president generally doesn't want a scandal-ridden cabinet and people going after his cabinet for things that are hard to defend. He's better off defending policies than he is individuals that have done things that perhaps aren't defensible. I haven't followed it, but I know there were a lot of things they said he had done, and Trump never really came to his defense other than saying his policies were good, but when you build a 43,000 soundproof phone, I don't know, those types of things they're symbolic. I mean, in the whole scheme of government budgets, it's nothing, but still, they're not authorized to do that, and they take trips, and first-class trips, they appear to be lavish. It just sets a bad tone. So he probably resigned for that, and I think if Trump thought he was essential, which he probably isn't, because what you want an EPA director, if you're an environmentalist, is somebody who's going to draft a zillion regulations and enforce them. But if all you want to do is cut regulations, you don't really have to put anyone particular in there. You just have to put someone in who can sit there and not build soundproof phone things, because all that person has to do is either do nothing, not enforce regulations, or cut them. So I don't think he felt probably that Pruitt was worth going to the mattresses over. All right. Chicago Electric Bicycle. Yes, tariffs on China start tonight at midnight, and I think China said they wouldn't fire the first shot, but they had prepared their set as well, and they would go into effect immediately thereafter. So I guess, I don't know which country has an 8-hour start or whatever the time difference is. I don't know what impact they'll have initially. There's many scenarios that if they take into their logical conclusion, may be that they end quickly, but taking to a perhaps semi-logical and semi-illogical conclusion, they may end up further down the road with more tariffs and some economic impact on both countries. See, both countries, everyone seems to think they pick winners. The U.S. is screwed, and others say China is screwed. For the most part, a trade war, if it's a prolonged one, both parties lose, because trade just becomes more expensive and becomes less prevalent, which means less economic activity, which means less wealth generation. It's just not a good thing to slow down trade and put up barriers. However, if it turns out that the tit for tat turns out that they negotiate better deals, which actually will increase trade, meaning, let's say China opens up certain of its markets, which they appear to be willing to do now, to other countries, and the United States makes some concessions on maybe China builds a plant in the U.S. Who knows? But there's ways of creating a positive out of a trade war, provided it doesn't just become a full-blown trade war where you're trying to win the trade war rather than try to win the peace. And I think China has very smart people working on this. They've got their centrally planned economy figured out. They didn't count on this, so they can't really prolong this, because they know that any loss that they have due to a trade war will have to be compensated by the issuance of more credit, because they've already counted on their state-owned enterprises producing a certain amount, shipping a certain amount, so they're going to have to figure out how to make up any shortfall due to tariffs. Now, on the energy side, one of the things they've done is they said, okay, well, let's put a tariff on U.S. oil, which they import a lot of, and then they have to figure out, well, we'll buy oil from Iran. Now you have the potential from going from a trade war to a potential, I wouldn't say a real war, but the point is the United States would like Iran to become a pariah state and no one deal with them. Now we know Russia will deal with them, but the United States would probably figure China wouldn't deal with Iran. So maybe Iran makes up its oil difference that it doesn't buy from the U.S. or it buys, but it slaps a big tariff on, so in effect it buys less, and that it ends up buying oil from Iran. So now you're shaking up the geopolitics, which is a spillover from the trade war. And then you have the United States talking to Saudi Arabia, telling them, look, you got to increase your production because Iran's selling its oil to China and we need more oil. And then there was talk today, and there's another point I had raised back in September, went unnoticed. Well, it wasn't what I said went unnoticed. You can expect what I said to go unnoticed. But Nikki Haley had said this, and I reported on it, that they were talking about back in September, when Trump gave a speech at the UN about Venezuela, about an embargo. And I said, whoa, embargo? Now, there's two types of embargo. There's economic embargo, but if it's an oil embargo, that can mean, okay, we don't buy the oil. But if you make it an embargo, it could also mean you ring fence the ports and you don't let them leave. That's an act of war. So now they're talking about that again. So you can see how it's not a trade war in isolation. It's not just one country versus the other. All these things are tied together. Now, Trump is supposed to go talk to Putin soon. So we just have to keep an eye on everything and see how it goes. So I don't know how it'll work out, but I would imagine the advantage of a trade war over a shooting war is that you could be more strategic with it. You don't have to consider loss of life, which makes it harder. It's hard to win a war when you have to put human lives at stake. But if it's just economic pain, I say just economic pain. It's easier to do bargaining. And the reason I think the U.S. has the advantage potentially is while the United States could be harmed, I think that the Chinese issue is the total number of people that are hundreds of millions of people that are reliant on these jobs. They don't necessarily have the same social welfare, and they'd have to come up with that if they had to lay off tens of millions of people because of any type of trade war. Now, the amount we're talking about now isn't anywhere near that. These are isolated tariffs. It's not like entire industries. But if it ever got to that, I think China would be the loser because they have 300 million people brought in from the countryside living in these massive new cities. And I think you would have more civil unrest there than you would in the U.S. But if both countries get into a point where they're neither trading with each other and you have a full-on economic depression, then no one's going to be better off. I don't think either party will let it get to that, but there may be some interesting twists and turns as we go along. Tom Manley. How can we have a real trade war when so many of the corporations have plants within China building products for us in China? See, that is another twist of the whole thing. So obviously when they put the tariffs on, they have to make sure that the tariffs maybe don't impact those companies. But, I haven't looked at that, but one of the things that Trump is against, he says, is having U.S. companies making goods overseas and then letting them fly in without the tariffs. He's never mentioned China in that regard. He's mentioned Mexico and other places. But you're right, China has a lot of American companies. That's how China got its foot in the door, was the U.S. companies moving over there. Then Chinese companies started to also produce and export in their own right. I think the main issue with China for the United States is the IP issue. So there's also a lot going on that we have no idea. There's trade negotiators. Trump likes to think he's negotiating the whole thing, but I doubt it. I'm sure there's meetings all the time. Hubzilla, Iran is now as vulnerable as China. It takes only milliseconds to blink before midnight. Iran has been vulnerable for the longest time. Even during the Iran deal, they've been an isolated country because of the Western powers. Do you see, DW, a small depression, or will this be a short problem and trade will balance out for all countries? Well, yes, that's what I think. As you wrote that, I was probably giving you my opinion on that. I think it's in the benefits of all parties to see how far they can go with the tit for tat. But I think ultimately they need to come out with newer trade deals that are beneficial and don't continue to harm both countries, because that's not good for anyone. These wars of attrition, anyone will tell you, that's the worst thing that either country can get involved in militarily or in a trade war. Hubzilla. Lewis, any opinion about apparent cancellation of Saudi oil IPO? That's been on the rocks for the longest time, and it's supposedly the biggest IPO ever. And I haven't looked into why they've been canceling it, and they just look like it's not going to go forward again. Maybe there's not the appetite. Maybe it's a political thing with the bankers. I don't know. So we'll see what happens with the Saudi oil IPO. I think Saudi Arabia needs that IPO. They need the money. The best thing about issuing equity securities is if it doesn't work out, you don't owe anybody anything. So that's like companies like Tesla, Amazon, Zillow, any of your companies that don't make any money, Netflix. If they've issued a lot of equity, they can raise $1 billion, and then they can lose $100 million a year for 10 years. And if it looks like they're 5 years in and they're still losing $100 million, they'll do another $1 billion equity raise. And in today's world, the lunacy of it is they can continue to raise capital even though they don't show a profit. And so you have these companies, they're really zombie companies, they're called unicorns, but if they don't make any money, what's the point of them being in business? And they employ a bunch of people, but they're not making any money, and yet Wall Street will give them money because somehow they managed to make the stock price rise. I mean, even Tesla today, I think, $100 to $300. It shouldn't be anywhere near that, in my opinion. It's not investment advice. It's just that the company doesn't make any money. Why would it be worth billions of dollars? DW, okay, who did the thumbs down? Well, you're bound to get people who don't like things, and that's not only natural. Okay, K7 Gixer 1000. Armico wells are mostly water now. Stay away from that dumpster fire. And then Hubzilla, that sounds like they're trying to offload a limit. That could be another reason. The bankers are looking at they're doing their due diligence. The lawyers are looking at it, and they're just not comfortable with what they see. I mean, oil mines they probably just as susceptible to that Mark Twain expression. You know, what's a mine? It's a hole in the ground with a liar standing in front of it. I mean, who knows what's in these? You can have all these geological experts. What was that story? I think it was called Bre-X or something. It was an Australian mine. They had like a multi-billion-dollar market cap, and they had no gold. None. Company went bankrupt. It was about 10, 15 years ago. So that does happen in the world. I'm not saying that Saudi Arabia is in that position, but who knows if there are Armico wells. It's now the time where, oops, thought we had more reserves than we did, but thanks for the $4 billion in the IPO, and good luck getting it back. I don't know if that's the case, but that is the risk in an IPO in a company that, has operating history, but it hasn't had operating history with the same transparency. So when I used to do IPOs, one of the requirements was you wanted to show solid, audited financials that showed 2 or 3 years of profit before you even thought about going public. Well, in this case over here, you have no idea what a state or Aramco, whatever it's called, how it's done. And today, you just come up with an idea, social media, whatever it is, and you put a prospectus together. You full out admit you don't make any money, like Snapchat, and you say we don't expect to make any money. And no one cares because they say as long as the stock price goes up, what do I care? All right. Well, thank you all for joining me this evening. Unless there's any questions, further questions. And remember, tonight's show was called Trainwreck on China's Belt and Road. If you're just joining now, you can go back and listen to what that was all about. And join me again tomorrow night at 8 o'clock. Thank you very much.